Bro, what's poppin', everybody? Welcome to another video. You might see this in question, like, yo, what is this? What do you got me looking at right now? But this is my trade zone. This is a trade that I took that I feel like is I took this trade on September 26th, and I feel like this trade can actually help a lot of people out when it comes to how I manage and how I close positions, because yes, taking good trades and being able to take winners is, obviously the first part of it, but being able to manage them properly once you're in them, being able to know when to close, how to take partials and all that, I feel like is almost just as, if not more important. And I got this question in my Discord and it made me want to make this video. So how do I go about taking partials? Do I take partials ever? How do I manage my positions? And I want to get into all of that today. And I have this trade pulled up because I think that it can help a lot of people out just by seeing this. Now y'all can see this trade that I took right here. I took this short off of this 1 minute inversion. We were rejecting the gap, and we had this low resistance liquidity beneath us. And as y'all can see, I took all off at this internal low, and y'all can see price ended up completely dumping it extra, really to the next, major sell side level, 70 points, and then we sold off an extra, almost 200. Now, am I mad about missing out on this extra, move? No, not at all. This trade netted me $1,895 per account. Am I mad at that? No. Why did I close where I close at? For me personally, with my system, especially recently, just based off of the given price action that we have been, just experiencing within the last couple weeks, couple months, my runners on how I trade have not been hitting. So I have been taking all off, if not, I've been taking a majority off, if not all off, at the low-hanging fruit. And what this trade is a perfect example of that. Now, why did I close all at this low right here? This is a low resting inside of a higher time frame bullish PD array. When you have bullish PD arrays, when you're in a short, there's a bullish PD array with a low that you're targeting resting within that, it is very likely that price is to reject from there. So me personally, I like to close all where price is likely to reject from. I don't want to try to hit the craziest risk to reward trades. Yes, I could have held down here. I would have got a almost 4R. If I would have targeted this low down here, I would have got a, what's the 6R, 6.6R. Yeah, that would have been cool, but at the same time, a good majority of the time, price will come down, sweep this low, and then instantly reverse back up. I don't want to do that. I don't want to put myself through that mentally. I like to take off where I am most confident in. So that is why I targeted that low, and I took all off at this low. And now if I were to partial, I would have taken out at least 75 to 80% at this low, just because of the fact that I don't want to close at a negative risk to reward. Like, some people will take off 25% here, then get stopped out, trying to be greedy and trying to let their profits work. But taking off 25% here isn't really going to do much for you. At the end of the day, if I'm risking, let's just say $200 with this stop loss, if I'm taking 25% off at this initial low, which is a 2R, I'm only going to be closing at like $100 at the first TP. So when you do that, let's just say I close at $100 and I get stopped at break even right after that. That's only making $100, which is me closing at a negative risk to reward because I was initially risking $200. So with that being said, understanding that math, I don't really like to take quarter positions or half position partials. If I'm taking a partial and I look to see, price extend past my initial take profit, I'm going to secure a majority of what I have on the table, just because of the fact that I don't want to risk giving profits back past where I see, price initially targeted. My price targets are where I see price initially, or price most likely to reject from, and I don't want to really look to see anything more than that. I don't like to take the low-hanging fruit. I don't like to be greedy. I don't like to try to catch the craziest risk to reward trades, and that is how my win rate has been increasing recently. I have been taking off the low-hanging fruit. I have not been trying to extend my take profits. Now, yes, some people that works for them. For me, when I recognize myself trying to do that, when I call myself just trying to catch the highest risk to reward trades, it wasn't working for me. So I ended up buckling down, taking the lower risk to rewards, really just trying to settle in, taking off that low-hanging fruit where I'm most confident in, not trying to be greedy, because I oftentimes will, let's just say, for example, price doesn't go to this extra low. We end up sweeping this low and stopping me out. I didn't close for anything. That can cause me to spiral. Like, you have to understand how you think and how you work mentally. That is a very likely situation where I can spiral, crash out, end up forcing trades because I was just up X amount of dollars and I want to get that back. So now I'm going to try to re-enter, I'm going to get FOMO, whatever the case may be. And I have blown a lot of accounts like that. So I would say for you, understand how you operate. If you can withstand seeing 2-3 risk to reward trade coming back to break even and stopping you out because you wanted to catch a 4 or a 5R, then that works for you. But for me personally, I don't do that. If I'm taking partials, which I rarely do, it will be at a place where I'm most confident in, and I'm closing 75 to 80% of my position, if not even 90%. I don't like to really leave too many runners just because of that fact that it can skew your risk to reward, and it can also cause emotional damage if you didn't close the right amount. Can leaving runners be beneficial? Yes. And I will just draw up an example right now on when leaving a runner can be beneficial, right? So let me just try to find one. We'll find an example where leaving runners can be beneficial, but at the same time, it's always best to close at the low-hanging fruit. Let's just say for this, if you took this long right here, once you got this inversion, I would have taken off 100% at this low or at this high, maybe even, let standard deviation work, maybe close a little bit above that. But mainly, I'm going to look to take off all at this high because once we're in uncharted territory, you don't know where prices to go. Yes, we can expand another, 100 points. Oh, yeah, we can expand an extra 100, 200 points at that after we take this high, but at the same time, you can also see price instantly reverse and stop you out. I like to take off where price is most likely to go, my highest convicted draws on liquidity. Yes, we can take that, we can stop me out, we can take that and extend, whatever the case may be. But for me, when I'm most confident, that's where I like to take it. If I were to want to take a partial, I would close 90% of my position here. I would not look to see too much running. And even at that, when you recognize closing, unless if you're trading with higher size, closing 80 to 90% of your position to try to leave runners to cash an extra couple of dollars really isn't going to do much. You might make an extra $100 to $200 if you see price really run, but at the same time, unless if you're really trading with some size, you won't see too much from leaving runners. So I personally don't even really recommend it for most situations. A situation where leaving a runner might have been beneficial maybe would be, it really depends. Like if you have a draw like this, right? Let's just say I catch some type of long within this, and obviously this would be the most prominent draw on liquidity. For me, this would probably be my break-even point. Now, why would this be my break-even point? Because let's just say I enter some type of long within this, market maker buy model here, and this would be a This would be a 1-to-1 basically. I don't like closing at 1-to-1s. So what would I do here instead? I would go break even once this initial high is taken because of that fact. I like to close at a minimum 1.5 risk to reward. 1.5 to 2 is usually my bread and butter. So since this is not a 1-to-1, I'm going to look to extend my price targets. Obviously, where's the next, most recent high? These internal highs resting within this gap. Now we're at a 1.87. Now I would look to probably partial within here. Obviously, this is the ultimate draw on liquidity, these resting highs up here. But this will be my break-even point. Once we take this initial high, just because, yes, it is a very prominent draw on liquidity, price is very likely to go here, but I like to catch higher risk rewards. I don't like to take 1-to-1s that often, so I will go break even once that's taken, and that is usually how I manage my positions, based off the risk to reward, based off whatever structure is presented in front of me. Obviously, this is a low resistance liquidity when price is very likely to go to draw towards these highs, but as you can see, I would have been stopped out. Well, we would have came and stopped me out at break even regardless. If I would have tried to hold much longer, this would have probably been my main price target here. I don't look to catch the biggest risk to reward trades. I like base hits. I like the low hanging fruit, and that is what has been working for me. That is how I've, been succeeding in the market recently. So, if you have any other questions, though, please leave them in the comments. If I didn't explain anything to the best of your understanding, just let me know. I'm happy to comment back and forth with y'all. But yeah, I'm gonna conclude the video right here. I appreciate you for watching. I have a free Discord on my bio. Please leave a like, comment, and subscribe, all that good stuff. I'm gonna catch you up in the next one.